What's up, traders? Welcome back to another video. So in this video, we're going to keep it short and sweet. We're going to be talking about market cycle and how to use market cycle when you're looking for entries. So if you guys don't know what market cycle is, let me go ahead and show you guys a small diagram of what that looks like. So basically, this is what market cycle is. You're going to have an accumulation. All right, once you have your accumulation, that starts out your trend, that starts out your cycle. Then you're going to have a reaccumulation, right? And then you're going to have a distribution. Okay, so this is your market cycle. So now, depending on what your market structure is, the market is either going to react off of your reaccumulation, or it's going to come back to the origin, which is going to be your accumulation, right? So the origin of this, let's call this a leg, right? Let's call this a move towards the upside. So this right here would be your origin, and this right here would be your decisional area, your slingshot area, right? That type of things. Okay, so essentially the purpose of this is this happens on every time frame. Okay, market cycle happens on every time frame. So a way to use it when you're looking for entries is, one thing that happens a lot when we're looking for entries, especially when you're looking for confirmation entries. Let's say you have a point of interest that you're looking at. One thing that happens is you'll see the market come down here and will give an accumulation, and potentially you might miss this accumulation. All right, so if you miss this accumulation, you're probably going to see the market just take off, right? You're going to see the market just take off, and it's not going to come back down and mitigate this until later, right? That usually happens a lot with confirmation entries. So the purpose of the market cycle is, if you miss the first entry, which is going to be your primary accumulation or that primary start of that cycle, you're going to have to play the rest of the cycle. So what is the rest of the cycle? Well, we know after an accumulation, we're going to see a reaccumulation, right? So after this accumulation happens, let's say you miss this accumulation, right? Once the accumulation is formed and is fully completed, the accumulation is done. All right, you guys have to understand that you can't keep trying to play off of the accumulation, keep trying to play off the accumulation. Once it is completed, the spring, the test, right, the LPS, it's done. Okay, once you miss those, the test entry, the LPS entry, and the market takes off, it's done. So once that happens, what are you going to have to play from? You're going to have to play from the reaccumulation, right? Because if buyers are within this market and buyers have gotten to this market, which is what accumulation means, this is what it shows, this is what it represents. So if buyers have truly gotten to this market, they're going to continue buying the market. And what does that mean? We're going to reaccumulate, right? The market cannot technically accumulate again. That's why it's called a reaccumulation. Okay, because technically, in order for us to get an accumulation, the market has to already be bearish for us to stop and change hands. So once these hands have changed, all we can do is reaccumulate. Okay, I hope you guys are understanding that. For those of you that are not hip to Wyckoff and how these things work, with supply and demand and things like that, you can go ahead and sign up for our mentorship, or we have a whole bunch of free videos on this as well if you want to check those out. Okay, so the basics of this video is for you to understand that once this first move happens, you're going to have to try to trade the reaccumulation. So essentially, understanding what the market cycle is, and let's say we have a high right here. So now once the market takes off and you start seeing something like this, right? What is that? That's the distribution. So now this market cycle is completed. So either the market is going to come into here or here. That's all you have to understand, and that makes it easier for you to know where to get into the market and how to play this market. So now, depending on what time frame this is, this could happen all on 1 minute time frame. Okay, I'm going to show you some examples. I'm going to go through some markets, probably cover some trades, and right now I'm just kind of elaborating the idea and the foundation of what I'm talking about in this video. So this could happen on any time frame. If this happens, let's say this is on a 1 hour time frame, seeing this market cycle, seeing this accumulation, this reaccumulation, this distribution, you understand that now the market's going to come down to target some areas of demand that either is going to push us higher or that we're going to invalidate and go to the downside. But see what I just drew right here? In order for us to invalidate the demand, we have to redistribute. For my advanced students, right, that peeped what I just did here, technically what I just did is I just started another market cycle. All right, So the market moves in cycles. If you guys just understand this, it's not always going to look this clean, but understand what's going on. That's the purpose of Wyckoff, is to understand the price action, what's going on. So rewinding a little bit, this right here is a market cycle. This is a bullish market cycle. So we have an accumulation, a reaccumulation, all right, driving us to the upside, making a new high, and now we have a distribution. Okay, so this distribution is going to come down to target these demand areas. All right, so once we come down to these demand areas, if buyers are still interested in this market, if buyers are still strong in this market, we're going to accumulate within one of these areas. Now, if we do not, we're going to redistribute. So the same thing, right? If we have a distribution, once the market goes down, it's going to redistribute. All right. If this is going to be a seller's market, we're going to have a redistribution. We just created a bearish market cycle. So what do you expect is going to happen? Market is going to accumulate, come up, test one of these areas here, either this one or this one, and we're going to either continue driving down, right? Or, like I said again, we're probably going to get something like this. Okay. Now, it's not going to be like this where the market is constantly breaking these highs and lows, right? Most likely than not, I was just showing you guys an example, but most likely than not, when we go back to our first leg right here and go back to our first cycle that we're talking about, the market is going to accumulate within one of these areas. If the market is bullish, the market structure is bullish, right? The market is going to most likely continue higher and accumulate within one of these areas. All right. Now, if there was supply up here that took over the market and the structure was bearish, then you would understand why to take sales from here. OK, all you have to do is understand the cycle and understand where you are in the cycle. All right. So tag that in with your structure and what's going on and know what side to play on and understand who's in control of the market. That's all you have to do. This allows you to see who's in control of this market. Once you see accumulation, reaccumulation, and potentially this doesn't even have to be a distribution, guys. This could turn into another reaccumulation, right? And then we can come down, another reaccumulation. What does this symbolize to us? This symbolizes that buyers are in control of this market. All right. So now that we're on EU, guys, what do we have here? We have a distribution schematic over here. It's not the cleanest distribution. So I hope you guys know that distributions isn't always going to be that schematic that you see on the PDF every time. It's not always going to be that. This right here is a distribution. What do we have after the distribution? We have a redistribution, exactly how I showed you guys how the market does it, right? You can see we have a market cycle being completed here. And what you could see actually is before even going into this, look what we have here. An accumulation, a reaccumulation, distribution. What happens? We invalidate this reaccumulation, right? Creating a redistribution. So, you know, to put it in simpler terms, we had a bullish market cycle. Like I said, accumulation here. You can see the reaccumulation. If you guys that know how to spot these areas, you see the creek and you see that this right here is a reaccumulation that drives us into the supply, right? Once we get into the supply zone, we have a distribution. Distribution goes ahead and invalidates demand, which is a sign that sellers are taking control of the market. For those of you who are in the mentorship and understand that. And that signals to us that now we are looking for sales. First of all, we're looking for sales entirely because of the supply zone and the fact that EU was bearish, right? So honestly, this bullish market cycle wouldn't have phased us because market structure is important. You have to understand where you are in market structure. So what you could have did is you could have used this little bullish market cycle right here with the accumulation and the reaccumulation as areas that you want to see the market invalidate. Why? Because you understand that if this market is going to sell from here, once we react from this area, we must invalidate one of these areas or both of these areas, honestly, as we did right here. But we have to invalidate at least this area right here. So that's why this was a key area. And that's why I wasn't looking to buy from here, because I knew that this was a seller's market, as you guys can see. So it's not just one thing alone, right? When you're trading these markets, it's not just one thing, guys. You have to put everything together. So that's one example right here. You see the distribution, redistribution, market completely dies and just falls, right? So one thing that's going on currently from today, I can show you guys right now. is basically the same exact thing, but this time we have a bigger distribution. This is a type 2. So here's your distribution right here, this huge area. You can see we took out liquidity of Asian highs. We even took out this liquidity, so it's a type 2. And then we have a redistribution. So we have a distribution, we have a redistribution, and the market does what? It continues down. All right, so it's pretty simple, guys. It's just like this. This is what's going to happen. Just understand the market cycle. Let me see if I can find some more examples. I believe GU did the exact same thing. Not today, but recently. Okay, right here. So same thing, guys. Look, and I remember talking about this in one of the analysis as well. So here we go. We have our distribution here. Distribution inside of a supply area. Market distributes, right? We go down. Look what happens. Redistribution. All right. Redistribution. After a distribution, you're going to see a redistribution. So how can this help you guys? Well, understand, if you did not catch this distribution is over. It's finished. Okay. Why is that? Because everything here has been mitigated and the market has already made its move from the distribution. All right. So this distribution right here, you weren't a part of it while it was happening. You didn't get the mitigations of the distribution. It's over. So what do you do now? Now you either wait for the distribution to go down and invalidate areas to where it proves to you that there were actual sellers here, or you wait for the redistribution. Exactly what happened here. And what you're going to notice is there is a distribution on a fractal time frame within the overall redistribution. Okay, so a little thing for you guys to know that these markets are fractal. Guess what? There is a redistribution inside of this distribution. All right, and I mean, if I zoom out, this whole entire thing is a redistribution. All right, guys, the market is super fractal. So I mean, this might go a little bit over some of you guys' heads, those of you that are not aware of how these markets are and how Wyckoff is, right? Like I told you guys many times before, you can find it a whole bunch of places. You can check out my mentorship. You can check out others people's, courses and things like that. There's a lot of places that these things are being taught, right? So if you want that information, like I said, links in the description. I have talked about Wyckoff a lot on this channel as well, so you guys can see it all on there if you want more information. Wyckoff is important once you understand how to use it. So I hope this video helped you guys. I hope you guys got some good gems off of this video. I will see you guys in the next video. Let me know if you have any recommendations of types of videos that you want me to do for you guys and make, and I will work on it for you. So just let me know. You can email me, you can message me on Instagram, whatever the case may be, guys. So just let me know. Peace out.